Hey everyone, in this video I'm going to answer which is the better stock to buy. Is it Palantir Technology stock or Tesla stock? Two of the more popular stocks in the market today. I'm going to answer that question in this video. You're not going to want to miss it. Let's get right into it, starting with comparing revenue growth. Looking at the revenue growth over the last several years, quarterly, you see Tesla's revenue growth was much higher than Palantir, but that gap has narrowed in recent quarters. That gap has significantly narrowed, with Tesla's revenue growth of 24.4% in the latest quarter and Palantir at 17.66%. Tesla faces significant competition, with seemingly every car company now ramping up production of electric vehicles significantly. Tesla's had to start a price war that now nearly everyone is participating in, so that's going to bring down revenues, because of course you're selling cars at lower prices, and if that's not offset by greater unit growth, which hasn't been the case so far, then your overall revenue will fall, at least in the short term, until if perhaps you maybe force some competitors to shut things down, and then you can grab their market share and grow faster, 4, 5, 6 years later. But for now, many of these companies are very well capitalized, and I don't see any of them going out of business anytime soon. So in the near term, revenue growth is going to be very close between Tesla and Palantir. I wouldn't be surprised if they are tied essentially for revenue growth over the next couple of years. The next thing I wanted to compare is cash flow from operations on a quarterly basis. And what I notice here is two things. Number one, Tesla's cash flow from operations is way ahead of Palantir's. Number two, Palantir's trend is better than Tesla's. Palantir's cash flow from operations, if you look here from the bottom, is significantly higher at 187 million compared with close to negative 80 million. Tesla, meanwhile, from its bottom, has grown its cash flow from operations also, but not as significantly as Palantir on a percentage basis. Tesla growing from roughly 1 billion to 2.5 billion. And if you look recently, its cash flow from operations is relatively flat from the high of reached in January of 2021. It's back at that level, and for the reasons I mentioned earlier, Tesla will find it difficult to boost cash flow from operations because it's slashing prices on cars, which means it's going to achieve smaller profit margins on each vehicle, which we have already seen, which is going to lead to less cash. And already that's starting to show up in Tesla's financial statements. So, in terms of cash flow from operations, Tesla with a big lead in terms of the overall level. However, if I was to forecast growth over the next 8 quarters, I would guess that Palantir's growth of cash flow from operations will exceed Tesla's over the next 8 quarters. Now let's look at operating profit margin over the trailing 12 months. And again, Tesla with a clear advantage over Palantir in the overall level of operating profit margin. But again, Palantir showing incredible progress upward from a bottom of 120% up to negative 5.93%. Tesla, meanwhile, very impressive operating profit margin over the trailing 12 months of 15%. This is one of the industry's best operating profit margins of car manufacturers and sellers. And you can argue with me if Tesla's a tech stock or a car stock. I'm not going to argue with you on that. Just comparing Tesla with other car manufacturers, Tesla's got one of the best operating profit margins. It's up there among the leaders in the best operating profit margins. And if it continues to expand in scale, it's demonstrated, Tesla has proven that as it grows, it improves its operating profit margin. Now, the only headwind to its operating profitability is the one I talked about earlier, in that rising competition has forced Tesla to slash prices, and at the same time Tesla's paying more for materials because now it's competing with a host of other companies that are buying up the same materials, so the price of those materials have increased substantially. So Tesla's getting pinched in terms of profit margin on both sides. Meanwhile, Palantir, as it's growing, it's demonstrating economies and scale, and the company's competitive advantage is such that it doesn't compete with everyday data analysis, data um, using data to increase performance, increase optimization. You can call it AI. I just look at it as companies using data to improve performance, right? That's what it is. If you have good proprietary data, you can use that data, develop a large language model, develop AI models to improve your performance, improve profits, improve revenue, which is what Palantir will help you do. Now, their services are not cheap. Palantir is one of the most expensive services out there, but they've proven to be effective. So businesses are paying up for that service. Finally, let's look at valuation, and they're very close. Tesla stock trading at a forward price to earnings of 48, slightly cheaper than Palantir stock trading at a forward price to earnings of 54. So, if I had to pick one of these two excellent businesses to buy today, I would pick Palantir stock. I think Palantir's near-term prospects are much better than Tesla's near-term prospects, which are challenged from rising competition, and it remains to be seen how much that impacts profits going forward. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.